Bharti Airtel's second quarter revenue growth beats estimates, while margin also expands. The stock is the top Nifty gainer, up around 2.5% as brokerages Jefferies, CLSA, Citi issue bullish calls on the stock.
Bharti Airtel's board approves the purchase of an additional 5% equity in Indus Stars. The stock surges close to 2.5%.
Hitachi Energy locked in upper circuit after strong second quarter performance, where the profits and EBITDA beat estimates. Order inflow too rises 13% year on year.
"3M India reports double-digit growth across segments in an operationally strong quarter. The margin also expands significantly. The stock flies away. It's up close to around 18% as we speak."
And a bunch of other stocks reacting to earnings. TBO Tech surging after its 25% growth in the second quarter. Godfrey Phillips, on the other hand, under pressure as revenue declines in the second quarter, much below what the peers have reported.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Mangalam. And as we speak, at the top of the screen, you can see that the markets are a little under pressure. Remember, today, in fact, is the weekly expiry. So we're down just around 50 points thereabouts. But you'll have to say, after the kind of recovery that we saw yesterday, the bulls will be hoping that yesterday's low actually is defended, and the 20 DMA as well does get defended. Just a quick check on the broader markets, though. A few stocks are going out of whack. You pull up TBO Tech. That one has moved to the high point of the day. Big move out there. LG Balkrishna as well is spiking up as we speak. So big follow-through is what we're seeing on that one. And Indian Metals comes out with a set of numbers later today. That one as well is spiking up as we speak. Recall explaining the company at half the current market capitalization. Big move on that name as well.
Big move on that name, Nigel. Two stocks which I'm looking at from the new age consumer stocks. We have Swiggy, which continues to do well, which is at the high point of trade right now. Remember, the company has announced its plans to raise about 10,000 crore via a QIP that would take their cash balances similar to that of Eternal. And the other one is Delivery. They had a good third quarter. We had the updates coming in for the festive season when it comes to volumes, and now they report their numbers in the next couple of days. So watch out for Delivery, seeing some pre-buying ahead of those numbers. But the good part for bulls from a market standpoint would be today's low is closer to 25,670 thereabouts, which is about 15-20 points higher than yesterday's low. So even if we did see a bit of a selling from the top, the lows were maintained, and from there we've seen a bit of recovery. But let's talk about one of the stocks on our radar. A good performance coming in from Tata Consumer, much ahead of street expectations on revenue and profit. And there was some margin contraction, but there have been sequential improvements out there as well. Sunil D'Souza, who's the MD and CEO of the company, joins us now. Thanks a lot, Mr. D'Souza, for joining in. A couple of things that stood out. One was, Narishco regaining its growth path despite heavier and extended monsoons. But at the same time, tea prices. You had told us a couple of quarters ago that you get a better sense of where tea prices are headed once the season starts. And out here, all things are pointing towards tea prices declining from the peak. So the question then is, can we see further margin expansion? What are you penciling in the second half for the tea and coffee business? And what kind of margin expansion can we expect?
So Mangalam, thanks for having me. Yes, we've had a good quarter, 18% top line, volume growth across all the different segments, and margins coming back, right? Specifically coming to tea, last year tea prices because of the supply-demand mismatch, had gone up by about 30%. And it was our estimation that about 20% will come off and 10% will continue to remain there. And broadly, that is what we're seeing out in the market. Now, I wouldn't read too much into a month-on-month movement on tea prices. Overall, we expect tea prices to be broadly benign from here on. In the tea business, we operate in gross margins of between a 34 to a 36 sort of number. And the reason for that is over time, we figured out as long as we're operating that number, we continue to gain market share, especially from the loose local regional players which are around in a commodity business, right? Right now, we're operating in that space. We've delivered 5% volume growth and 12% top line. So we're comfortable with pricing where it is. Right now, budgeting for roughly benign tea prices.
So what does that mean in terms of margins? Because your internal target is 50 to 80 basis points in terms of annual margin expansion. Obviously, that went out of whack because of the high prices in tea. Now that they're likely to remain benign, where do you end this year with when it comes to EBITDA margins?
So roughly, we have said that we'll grow EBITDA margins and we should be coming back to the 15 range by the end of Q4. And there's no reason for us to change that. We came in at a 13.6 this quarter. This quarter was impacted by primarily the US coffee prices, so to speak, primarily because of two things. Coffee prices have gone up, and on top of that, the 50% tariffs from Brazil, and Brazil accounts for roughly 30% of the mix for us as well as for the industry in the US. If I add that back, we're in the 14.6, 14.7 range. So we're touching 15. We have degrammed in the US in November. We've announced a price increase earlier in July. We've announced one more in January. So we hope to get the US margins back on track, basis which we will be broadly on a 15 or thereabouts EBITDA margin by Q4.
All right. Hi, Mr. D'Souza. Good morning and good to see you. Could you tell us what's the target market share in both tea as well as the salts market?
So salt market right now we're touching about 40. The good part is we've got to balance both the market share and volume growth, right? Salt, we had good volume growth this quarter. We had good margin growth, and we aim to be 40 or for thereabouts. A longer term period, we have higher ambitions in salt. Because we've got a full play right from solar up to rock salt, all the different price value equation straddled. In tea, we are at 2022 share player. We continue to grow volume and value consistently. Now, there's one thing you've got to remember in tea is a significant portion of the business is now shifted to quick commerce, e-commerce, and which channels are not consolidated by Nielsen today, as well as in modern trade, which is now roughly 15-16% of my business. One of the big players doesn't share numbers with Nielsen, and it's an estimate. So Nielsen numbers for market share, we would look at broadly from a directional perspective, not an absolute number.
Okay, all right. Let's talk about some of the inorganic growth that you've done in the past. You know, the Capital Foods and Organic India business. Is it on track to move towards that ballpark 500 crores per quarter number?
Broadly, it is on track. Nigel, last quarter in the GST recalibration, where most of my the good part for us was salt there was no GST earlier itself. It was exempt. Tea was in the 5% category, so there was no disruption there. My growth portfolio, which is Soulful, Capital Foods, Organic India, and coffee and ready to drink, all of them moved from the 18-12 bracket to the 5. So there was a bit of hiccup at the end of the quarter. Otherwise, we were in comfortable territory. Overall, for the quarter, Organic India still we've delivered a 30% growth. Capital Foods 9, coffee was 56. So we are in the ballpark of that. Overall, for the growth businesses, we've maintained that they will account for 30% of our volume and will grow at 30%. They grew at 27, accounted for 32%. So we were in the ballpark of our guidance.
All right, you were in the ballpark of the guidance. You know, the thing that stood out was the ready-to-drink beverages, which was basically includes Narishko as well. And the street was expecting a bit of a decline largely or a slower growth because of the extended monsoons. The season wasn't very favorable. Despite that, you grew about 31%. So what's the quarterly run rate that we should look at for Narishko, and by when does it cross that 1,200 crore mark?
So Mangalam, this year we are on track to cross the 1,000 crores overall. So we remain quite confident of continuing to deliver strong 30% plus growth in Narishko as we go forward. We did deliver 30% volume growth, 25% value, because we did a lot of re-indexing of pricing of retail margins last year about the same time. So we're cycling that. Going forward, we're cycling benign numbers, and therefore we remain confident of the 30% plus in Narishko.
All right. And final question, a smaller part of your business, which is Tata Starbucks, opened a fewer stores in this quarter as compared to the run rate that we've seen earlier. Are you calibrating your expenditure out there? What's the outlook here? Because globally as well, it is a category which is facing a fair amount of headwinds.
So Mangalam, in India, coffee has a huge runway both out of home and in home. And Starbucks is a play in the out of home space. We remain very, very bullish about that space. Bar the past probably 15 months or so, we've seen an overall slowdown in the QSR space, and we had stress on same-store sales growth. And therefore, we slowed down our outlet expansion. The longer-term number doesn't change as much. The good part was last quarter, we saw positive same-store sales growth and a 8% top line growth. EBITDA grew far faster than top line, and overall we were EBITDA and EBITDA positive. So the business is on a strong footing.
Okay, all right, Mr. D'Souza. Always a pleasure talking to you, sir. Wishing you well for the second half of the year. We'll track you to some of these targets. Have a good day ahead as well.
Thank you.
Time to slip into a short break. You come back, we'll focus on the technicals of the market. Somil Mehta will join in to help us out with exactly that as the markets trend towards the low point of the day.
Welcome back. The market holds around that 25,700 mark. A bunch of stocks which are spiking right now. Chennai Petro is up around 4%. It's been a big mover, so we'll watch out for that one. Alongside that, we do have some traction that is building up on something like Tejas Networks and Metropolis Health as well. And since morning, we've been talking about, a lot of these jewelry stocks. We also have, P.N. Gargil, which is a regional player in Maharashtra that has seen a bit of a spike as well. So all these regional jewelry players are seeing a spike. Remember, P.N. Gargil also has a higher amount of unhedged gold as against its other listed peers.
The point on CPCL, Mangalam, Chennai Petro, I recall at the end of the first quarter, we had explained this, that, the global refining capacity is down, GRMs are up, and their mixed product mix is such. That's why, in fact, they could stand to gain. And in addition to that, I recall their debt 2 or 3 years ago was 10,000 crores. The last reported number was less than 2,000 crores. So that's why the stock is up. Unsure if it's running ahead of itself, but, the stock is already up close to around 20-25%, from those levels of around 750 or thereabouts. So big up move is what we're seeing out there.
One of the casualties of today has to be Hero MotoCorp. So Darshan had told us that the wholesale units versus the retail units were a bit of a gap. And currently, look at that. The stock is down 4%. Has seen a decent move. So maybe a large part of that extended could be on account of some profit booking and long unwinding as well. Somil Mehta from Mirae Asset Sharekhan joins in for a quick technical check on the market. Somil, today's low is slightly higher than yesterday's low. We're still consolidating. Where do we go from here? And your stock picks.
Hey, hi, good morning. Good morning to everyone. Absolutely positive in the medium-term outlook till the time it stays about 20 and 40 daily moving average, which is around 25,600 and 25,400. I'm not expecting a very sharp correction in the very short term. Short term, we've seen a little bit of corrections, selling pressure, but I think this is an opportunity to buy the index, buy very specific sectors. From here, the support would be 25,600 and 25,400. On the upside, the targets, the first target would be 26,100, which was the previous swing high, and then on after that 26,250, 26,300, which is the all-time highs. So these are the targets. I'm absolutely positive, and the strategy should be to buy on declines.
Okay. What about individual stocks? What's on your radar?
First stock is Titan. Titan has just broken out of a flag pattern on the daily charts, taking support at short-term averages. Great setup overall in the medium-term outlook as well. And in the short term, stop loss would be 3,710. Target would be 4,000. The second stock is Godrej Properties. The real estate stocks are looking really good. Godrej Property would be my pick. Small flag pattern has broken on the upside, trading above the averages. Stop loss would be 2,275 and target would be 2,425.
All right. Thanks a lot for that, Soumya. Those stock picks and the view on the index. What we'll do is take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back. Keep an eye out on Vodafone Idea. There's further relief that's come in there. The Supreme Court has now allowed the withdrawal of the IT department case against Vodafone Idea that was claiming close to around 8,500 crore rupee dues. This is an old case, which now, in fact, there is some relief that's coming in there, and that explains why, in fact, the stock is, it saw some kind of profit taken in the morning. Now it's perked up a little bit as we speak. The lines are flashing for you on the screen, self-explanatory, that there is some relief that's coming in there for the company. So good news for them. I'll tell you what, we'll wrap up on this edition of Chartbusters. You stay with us. The team of Trading Hour comes up next.